The key question is not whether people are worthy of help. The key question is whether we are worthy of the country we claim to be. A country where honest work leads to a door that locks, where healthcare heals, where law protects without needless harm, where neighbor means more than next door. If you are fighting addiction, hold on. If you are sleeping in a vehicle, hold on. If you are tired of seeing the same scene, speak up and help build change. Support life-saving steps now. Syringe services, naloxone everywhere. Mobile medications for opioid use disorder, and safe parking with power and bathrooms. Push for prevention that lasts. Inspection-based RV entry, fast ID recovery, low-barrier housing with clinical staff, and public dashboards that track retention keys still turning locks months later. Not just beds filled tonight. The dream is not a mansion and a fortune. It is a key to your own place, a bed, a quiet morning, and a safe night. It is a mailbox with your name and a neighbor who learns to say it right. We may disagree on tactics, but we can agree on this. Everyone deserves a safe place to sleep and a real chance to heal. Build programs that deliver keys, care, and patient support, and the headlines will start to change, and so will our streets. The American dream still flickers. Our job is to keep it alive, one person at a time, until the map once marked by loss shines with recovery, renewal, and lasting change. We end with actions sized for a neighborhood and scaled for a city. Individuals, learn naloxone, save outreach numbers, donate phones and bus passes, greet people by name. Employers, offer predictable shifts, partner with navigators, keep a few roles for people re-entering work. Landlords, master lease a unit and measure success by on-time rent and support, not past mistakes. Clinicians, open one evening clinic a week, enable same-day starts. Coordinate with shelters for safe tapers. Faith and community groups, light a lot, add bathrooms, host monthly ID clinics. Policymakers, require offer in hand for every closure, fund safe parking and mobile care. Publish retention dashboards the public can track. This is not charity, it is maintenance of a community. The sound we want to leave you with is ordinary. A phone answered on the first ring. A van door sliding open, a key turning quietly. That is how a dream lives again, not with a single headline, but with thousands of small, repeated acts that turn crisis into routine care. Keep showing up. Keep measuring what matters. Keep keys in hands. That is victory you can count and a future you can hear. Let's start by taking a look under the hood and understanding how this whole system actually works. Home insurance isn't just about one company offering a single, straightforward price. It's a complex, multi-layered system that's built on a foundation of risk assessment and management. At the bottom, you've got your local or regional insurer, the ones who are writing those initial policies that you see every day. Above them is reinsurance. Think of it as wholesale insurance. That insurance companies themselves buy to protect themselves from the possibility of massive losses from major events. And above that is retrocession, which is where reinsurers offload some of their own risk to other parties. At each and every step along the way, someone is taking a cut, which adds to the overall cost. When big disasters strike and losses start to pile up, each level of the system raises its prices to compensate. And those price hikes inevitably trickle down to your individual renewal letter, resulting in higher premiums for you. For those who are looking to buy a home or who already own a home in 2025, there are three major forces that are all pushing in the same, unfortunate direction, driving up costs. First, the frequency and overall severity of natural disasters have been steadily increasing over the past decade. It doesn't really matter if you want to label it as climate change, chalk it up to plain bad luck, or simply call it the new normal. The undeniable reality is that when losses continue to mount season after season, the complex models that are used to calculate and assess risk are inevitably updated to reflect this new reality. Second, the cost of reinsurance itself has gone up substantially. Even when capital eventually returns to the market after a major event, prices rarely, if ever, drop back down to where they used to be beforehand. And third, concentration matters a great deal. If too much risk is concentrated in a single state or is tied to one specific, predictable threat, Some insurers will simply stop taking on any new business, or might even pull out of the market altogether, leaving state-run plans to pick up the pieces and provide coverage. There's also another significant factor at play that most homeowners never directly see, but that they always end up paying for in the end: litigation and the associated claim handling costs. In certain areas, a surge of claims that are often driven by aggressive contractors, abusive assignment of benefits practices, or even outright fraud has dramatically driven up those loss adjustment expenses. When that happens, even perfectly legitimate claims become far more expensive to process, and everyone's premiums inevitably go up as a result. Regulators can certainly tighten the rules and regulations to try and curb these abuses, and some states have indeed taken steps to do just that. However, the costs that have already accumulated and piled up within the system are still present, and it takes time for them to work their way out and for the market to correct itself. Here's how this all plays out in real life. In a scenario that's becoming increasingly common, a family diligently saves up for a down payment, finally finds a house that they absolutely love, and the monthly mortgage payments seem perfectly doable and within their budget. Then the insurance quote arrives, and suddenly the entire equation falls apart. Or even worse, they already own the house and are settled in, and the renewal premium unexpectedly doubles, all while property taxes and essential utilities are also steadily climbing. That's how a neighborhood that seemed perfectly stable and affordable in the morning can suddenly start to feel incredibly vulnerable and precarious by the afternoon. Insurance isn't just one single, fixed price that you pay each month. It's actually a collection of different choices and options that ultimately determine your actual level of risk exposure and your potential out-of-pocket costs. If you're planning to live on the coast or in an area that's close to brushland, you absolutely need to fully understand all of the levers and controls before you actually need to use them. Peril-specific deductibles, hurricanes, and other instances of strong winds often come with their own percentage-based deductibles, which can be substantial. For example, 2% of the coverage on a $300,000 home means that you're going to be paying $6.00 out of your own pocket before the insurance coverage even kicks in. Wildfire endorsements and named storm deductibles can work in the exact same way. A seemingly low annual premium that's paired with a huge event deductible is simply not a good deal if you can't actually afford to make that initial payment after a loss has occurred. Exclusions and sublimits. Make sure that you specifically ask for the section of the policy that clearly lists what isn't covered under the policy and what has specific coverage limits. Screened enclosures, fences, outbuildings, and water backup. Paying close attention to these seemingly minor details can be the difference between having something easily repaired and needing to take out a personal loan to cover the costs. Replacement cost versus actual cash value. Roofs tend to depreciate relatively quickly. If your policy only pays out the actual cash value on roof damage, the check that you ultimately receive from the insurance company can be significantly smaller than the actual bill for repairing the damage. Getting replacement cost coverage for both your home and your roof is typically worth the extra premium, assuming that you're able to get it. Mitigation credits. Some states offer legitimate discounts on your insurance premium for implementing certain preventative measures, such as installing stronger roofs, adding window protection, strapping, secondary water barriers, and fire-resistant landscaping. The smartest money that you can possibly spend on insurance is the money that you spend before a storm even hits. Strengthening and fortifying your home often reduces both your overall risk profile and your insurance premium at the same time. State backstops. When private insurance companies leave the market or simply stop writing new policies, state-backed plans step in to fill the gap and provide coverage. Citizens in Florida and FAIR plans in California and Louisiana are prime examples of this. These plans serve as a vital lifeline, and they're definitely not luxury products. They can be expensive, and they sometimes require you to purchase a second policy to cover the things that they don't. The bottom line is this: if you don't carefully read and fully understand the deductibles and exclusions in your policy, the headline premium can easily give you a false sense of security. You might mistakenly think that you're fully covered until you actually aren't. Florida's economy is primarily fueled by sunshine, tourism, construction, and a steady influx of new residents moving in. This creates both significant opportunity and considerable pressure on the state's resources. During the height of the COVID-19 pandemic, people flocked to Florida in droves, and builders went into overdrive to keep up with the increased demand. Then, the insurance market essentially buckled under the strain. Several insurance companies either went out of business entirely or stopped writing new policies in the state. Citizens, the state's insurer of last resort, ballooned dramatically in size as more and more people turned to it for coverage. Reinsurance costs soared, and premiums inevitably followed suit. In many coastal counties, the quoted premiums for regular homes jumped into the mid-four-figure range, and five-figure renewals became increasingly common, especially for larger or older properties that were deemed to be at higher risk. Flood insurance added yet another layer of complexity to the story, as federal rating reforms pushed some premiums significantly higher, while simultaneously lowering others, essentially redrawing the map of who pays what for water damage in the state. Families felt the impact of this as a daily tax on their finances. Potential home buyers who could once easily afford the principal, interest, taxes, and insurance on a home suddenly found that they simply couldn't anymore. Some existing homeowners tried to raise rents on their properties in order to cover the difference in their insurance costs, while others made the difficult decision to sell their homes or put off necessary maintenance and repairs. Local governments watch with concern as housing costs rose at a much faster rate than wages, making workforce housing completely out of reach for essential workers such as teachers, nurses, and hospitality staff. But even in the toughest markets, there's still a path forward and opportunities to be found. Florida rewards those who are proactive and prepare in advance. If you want to own a home there in 2025, start with mitigation. A fortified roof, or something similar that provides enhanced protection. Rated shutters or impact-resistant glass, sealed soffits, improved roof decking attachments, and garage door bracing can all put your insurance policy in a completely different, more favorable category. Many insurers, as well as some state programs, offer significant discounts for this type of work. Next, be smart and strategic about your location. Elevation and distance from open water both have a significant impact on your risk profile and, consequently, the price of your insurance. A home that's located 6 blocks inland with a strong roof and secure openings can be surprisingly affordable, while a similar home that's located right on the water simply isn't feasible from a financial perspective. Finally, use the seller's problem to your advantage during negotiations. If the current owner's insurer is willing to renew the policy for you when you purchase the house, lock in that quote and take advantage of it. If not, make sure to write your offer with an insurance contingency, which gives you the legal right to cancel the deal if you're unable to secure a policy that fits within your monthly budget. The overall trend in Florida is moving towards more practical and effective solutions. Tighter rules and regulations on claims practices, incentives for home hardening, and concerted efforts to move policies from citizens back to private insurers are all aimed at rebuilding a properly functioning and sustainable insurance market. For homeowners, the key is to shop for insurance as carefully and diligently as you would shop for a brand new kitchen. Louisiana's strengths are undeniable and readily apparent. Energy, ports, culture, food, and music all contribute to its unique charm and economic vitality. However, the past decade has brought one devastating storm after another, and the insurance market has taken far too many hits as a result. Several insurers have either left the state entirely or failed outright. The FAIR plan and other last resort insurance options have continued to grow in size as more and more residents have been forced to turn to them for coverage. Premiums in the most exposed areas have risen sharply, putting a significant strain on homeowners. Even inland, where wind and flood risks are generally lower, the negative spillover from the statewide market has driven up costs for everyone. The social impact of this situation is incredibly significant. Families with modest incomes simply can't afford to pay a premium that suddenly doubles, putting them in a precarious financial situation. Small landlords can't keep rents low and affordable when their insurance costs become their second biggest expense after the mortgage payment. When policies are not renewed and replacement quotes come back significantly higher, the decision that families face is stark and unsettling. Do we stay or do we leave? This is how people leave a place that they love, slowly but surely, not with a dramatic exit, but with a mounting pile of unsettling letters and difficult financial decisions. If you truly love Louisiana and plan to stay there for the long haul, there are several important steps that you can take to protect yourself. Elevation is incredibly valuable when it comes to mitigating flood risk. A home that's built higher than what was required by code at the time of its construction may qualify for lower flood insurance premiums. Flood vents, elevated mechanical systems, and proper grading around the property can all significantly reduce both your overall risk and the price of your insurance. Roof quality, proper nailing patterns, secondary water barriers, and window protection can all help significantly in wind zones, potentially leading to lower premiums. If you inherit an older roof that's not up to current standards, make a plan to replace it in order to unlock access to better insurance policies. On the financial side of things, treat insurance shopping as seriously and strategically as you would treat a mortgage refinance. Work with an experienced and independent insurance agent who can approach multiple insurance companies on your behalf, including surplus lines where appropriate, to find the best possible rates. Ask them to quote your risk into different ways. A higher deductible paired with a fully funded emergency fund that you can access if needed, and a lower deductible paired with a higher monthly premium. Carefully choose the option that best fits your actual financial situation, not just the one that looks the most appealing on paper. For local leaders, the primary focus should be on building resilience within the community, using a data-driven approach to guide their efforts. Tie permitting speed and property tax credits to home hardening improvements that residents make to their properties. Expand small grant programs that help homeowners afford necessary roof and opening upgrades. The most cost-effective way to reduce insurance rates on a broad scale is to systematically lower risk block by block, one roof at a time. California's situation is distinct from the others, but there are still clear parallels and recurring themes. Wildfire risk is the primary factor and has reshaped the insurance map in the state. After several consecutive extreme fire seasons, some insurers have stopped writing new business in high-risk areas or even statewide, significantly limiting coverage options for residents. Enrollment in the FAIR plan, the state's insurer of last resort, has increased substantially. Moratorium rules have temporarily limited some cancellations near recent fire zones, but securing new policies has become increasingly difficult in many zip codes, creating a sense of uncertainty and anxiety among homeowners. Meanwhile, high home prices and expensive labor costs have made every single claim more expensive to settle, further straining the insurance market. The result is an uneasy and unpredictable market where people who live in brush-covered areas are finding that buying or selling a home ultimately depends on one thing: can you even insure it in the first place? And if you can, will the premium actually fit into your monthly budget without causing undue financial hardship? The homeowner's playbook in California is all about creating defensible space around your home and maximizing ignition resistance to minimize the risk of fire damage. Clear the first 5 feet around the home down to bare soil or non-flammable materials, creating a protective barrier. Replace or cover vents with ember-resistant screens to prevent embers from entering the home. Upgrade to a class A roofing material, which offers superior fire resistance. Box eaves, seal gaps, and use non-combustible siding or install proper fire breaks to slow the spread of flames. Use metal mesh on underdecks and in storage areas to prevent embers from accumulating and igniting. If everyone in the neighborhood works together to implement these measures, overall risk and insurance prices can fall together, benefiting the entire community. Many insurers offer inspection-based credits for homes that meet established wildfire mitigation standards, and some state programs are actively creating a path to regulated discounts. For proven risk reduction measures, there's also a useful financing trick that you can use when buying a home. A buyer who stretches their budget to afford the mortgage but completely ignores the insurance costs might ultimately win the house, but then lose their entire monthly budget due to unexpectedly high premiums. Price the insurance premium first before making an offer. Savvy buyers are now making 2 offers simultaneously on different homes, then carefully choosing the one with the lower combined mortgage and insurance cost, even if the cheaper house isn't the one with the lowest purchase price. In a fire-prone market, the insurance cost can easily sway the decision more than a few $1,000s on the actual purchase price of the home. For policymakers, striking the right balance is a delicate and challenging task. Consumers naturally want affordability and easy access to insurance coverage. Insurers, on the other hand, want rates and underwriting freedom that accurately align with modeled risk. The middle ground lies in transparency on mitigation efforts, faster approvals for rate filings that are tied to real risk signals, and strong oversight that protects homeowners from unfair practices, while simultaneously allowing capital to return to the market and stabilize the insurance industry. For home buyers in 2025, insurance is an integral part of overall affordability and should not be overlooked. During the home buying process, don't even think about making an offer on a home without first obtaining a firm insurance quote or including a strict insurance contingency in your offer. Shop for locations based on documented loss history and mitigation potential, not just on cosmetic finishes and desirable features. If you're forced to choose between granite countertops and a class A roof with rated shutters, always choose the roof. It will pay you back twice over, once in reduced risk of damage, and again in lower insurance premiums. For sellers, the most valuable pre-listing expense that you can make might be a thorough roof inspection, a comprehensive mitigation upgrade, and securing a commitment from an insurer who is willing to continue coverage for the buyer after the sale. This complete package can significantly expand your pool of potential buyers and help you maintain your asking price, especially when other sellers are being forced to cut theirs. For renters, insurance directly affects the amount of rent that you pay each month. When landlords face higher insurance premiums on their properties, some will inevitably try to pass those costs on to their tenants in the form of increased rent. The solution to this problem is a combination of increased housing supply and greater transparency in the rental market. Regions that approve safer, denser infill projects with modern building codes will be able to keep rents more stable and affordable for residents. If you're renting in a high-risk area, proactively ask your property manager how insurance rates are trending and whether the building has undergone any recent hardening work to mitigate potential damage from storms or fires. Choose safer buildings with better overall construction quality. Their owners are far less likely to impose emergency rent increases in response to rising insurance costs. For builders, 2025 is the year to start selling safety as a key feature of your homes, not just as a minor footnote in your marketing materials. Publicly promote your wind and fire hardening specifications to potential buyers. Offer a clear and easy way for buyers to obtain insurance discounts through smart design and construction practices. When your buyers can confidently show an insurer the comprehensive package of safety features that they're buying, your sales team will be able to close deals faster and at higher effective values, even if the overall list price of the home remains the same. You can't directly control the weather or prevent natural disasters from occurring. However, you absolutely can control how these events affect your personal monthly budget and financial well-being. Start every decision about buying or renting a home in a coastal or fire-prone area with an honest assessment of the true total cost, mortgage or rent, plus insurance, plus property taxes, plus essential utilities. Don't forget to add the deductible that you could realistically afford to pay after a bad day or a major weather event. If that comprehensive picture works for you and fits comfortably within your budget, then keep moving forward with the process. If it doesn't, then consider changing the home, the block, or the structure itself until it does. Shop for insurance with the knowledge and diligence of a seasoned professional. Ask your insurance agent to clearly show you two different ladders of risk, with deductibles and credits explained in plain, easy-to-understand language. Invest strategically in the roof, the openings, windows and doors, the walls, and the overall space surrounding your house. These aren't just mere expenses. They're valuable tools that can significantly reduce both your overall risk of damage and the price of your insurance. Florida is teaching the entire nation that proactive mitigation efforts can save significant money in the long run. Louisiana is teaching the nation that resilience is inherently local and that unsettling letters can gradually empty an entire block of residents. California is teaching the nation that fire is an integral part of housing policy, not just a matter of forestry management. Learn these valuable lessons before you absolutely need them. Buy the house that can survive both the complex paperwork involved in the transaction and the inevitable challenges posed by the weather. Build a monthly budget that allows you to sleep soundly at night, knowing that you're financially prepared for whatever may come. Then, go back to living your life to the fullest. The sky will do what the sky does, and your well-thought-out plan will take care of the rest.